Hi, I'm David Paradice. Welcome to Euros Hartley's Finding the Front. Can't wait to have a chat. Let's go. Perfect. Thanks, mate.
Welcome to Euros Hartley's Finding the Front, where we get to know the people who front some of Western Australia's leading companies, providing you with real insights into the way they think and approach things, both in business and in life. So get the volume adjusted in your car or your headphones sorted and settle in for a great story. Here's your host, Tim Banfield.
Hey everyone, and welcome to a brand new episode of Euros Hartley's Finding the Front. For those of you who are not familiar with Euros Hartley's, we are a proudly Western Australian leading financial services company. We specialise in the provision of institutional sales through our specialist small to mid-cap institutional dealing desk that has a strategic focus on Western Australian resources, energy, mining services and industrial companies. We offer a leading full-service corporate finance team, all based in WA, specialising in equity capital markets, mergers and acquisitions and strategic advisory. This team holds deep relationships and knowledge across the WA corporate sector. We offer highly rated, targeted research services from our team of resources and industrial analysts through detailed fundamental analysis and extensive on-the-ground presence. And finally, we have a private wealth team that combine wealth management, strategic advice and stockbroking. The focus of the private wealth team is to ensure their clients achieve long-term investment success, wealth generation and preservation. They thrive on excellent client service, delivering results and building strong relationships that endure. If you'd like to learn more or engage with Euros Hartley's on any of the services we provide, please don't hesitate to contact us or visit our website at www.euroshartleys.com. Well, ladies and gentlemen, as you heard in the intro, we certainly do have a ripper of a guest on this episode of Euros Hartley's Finding the Front. Our guest is none other than one of Australia's legendary stock pickers, Mr. David Paradice AO. David has over 37 years' experience investing in stocks and established his own investment management business, Paradice Investment Management, back in 1999. Over many, many years, David and his hand-picked team, through a common love and absolute passion for investing and picking stocks, have generated an enviable track record of delivering quality returns to clients. They now manage around a massive $17 billion of client money. An Australian funds management success story, without doubt. This really is a cracking, wide-ranging chat on everything from building his funds management business, stocks, the markets, investing, the importance of team, life, and everything else in between. So without further ado, it gives me an enormous pleasure to introduce to Euros Hartley's Finding the Front, the founder of Paradice Investment Management, veteran stock picker, and all-round great guy who thoroughly loves what he does and doesn't mind a laugh either, Mr. David Paradice. Hi, David, and welcome to Euros Hartley's Finding the Front. It really is a treat to have you on the show, and I appreciate the fact that you've taken the time out to join us. It's a real privilege to have someone of your standing within the funds management industry on the show, and I must say, a real privilege. So thanks for joining us.
Mate, thanks for having me. It's the least I can do. What do you mean? Yeah, I love it.
Well, all of Euros Hartley's is very grateful, and our listeners. So, David, with Finding the Front, what we like to do is we understand where you're at now, but how you've got to this point and the journey that it's taken. And one of the important parts that I picked up in my research was in your background, you grew up in a place called Scone in the Hunter region in New South Wales, which was pretty formative.
Yeah, no, it was nice. My father was a doctor there. I'm one of six. I'm in the middle.
Yeah.
We used to live on a small place, a little property, 150 acres, about 5 minutes out of Scone. And I went to school, my primary years there, and used to ride a bike and sometimes a horse to school. And yeah, I loved it. I'd come back in the afternoons, catch the bus back and go out and get up the cows and do chores and things like that. And I think using your hands and that kind of stuff was actually good for me nowadays, you know.
Yeah.
It's proved to be a good thing.
Did you run many cows?
No, it was only just had milk. I used to milk the cows in the morning before I went to school.
Yeah, right.
Freezing cold too. Yeah, we just had dairy cows. I used to get dairy cows up at night and milk them early in the morning.
And your dad was a GP, I understand.
Correct. Yeah, my dad was a doctor and my mum was a teacher, but my mum did like stocks.
Is that right?
Yeah, and so she used, back in those days, they used to have the radio would go through all the major stock prices, and she'd have a little chart which she'd write every single stock price down every day. She'd listen to it.
That influence from your mum, did it rub off on you? Did she have a role in your sort of upbringing in terms of your affection for understanding what companies were doing? And
yeah, I think so. She used to make, comments about go to Woolies and, how well it was run and all that kind of stuff. But, she's quite financially literate, I suppose, and
Yes.
she has certain views about banks and insurance companies and this and that. And I think that some of that did rub through on me, but it's weird. I've always liked taking the bit between the mouth and having a crack, like an entrepreneurial, I always think, well, what's the downside?
yeah. With your schooling, you went to school in primary school at Scone, and you commuted back and forth from the farm. You went away to boarding school. Did you enjoy boarding school? King's College?
I went to King's. The first few years I didn't like that much, but after a while, I really enjoyed it. I have a lot of friends that I've had for life.
Yes.
And I think it broadened the mind a lot. I met a lot of different people from differing backgrounds. Being one of 6, I suppose, and my parents were not terribly well off, but it was a really enjoyable experience. I was homesick quite a bit, but it taught you how to get on with people, I suppose, and because you're forced into a boarding situation.
Yes.
And, learn to live with people that are different to you and how to get through a situation when you might have people with differing views and all that kind of stuff. So I thought it was helpful. And like I said before, I think the business at Scone, I'd go back to Scone on holidays. I'd help, do various work.
Yeah.
And I kind of feel they always say that people who are given chores when they're younger have assisted later on in life how they go about their business and things like that.
Yeah. Did you find school easy when you were there? I mean,
it's tough.
academically?
No, it was hard. I had to work really hard.
Yeah.
I work a lot harder than a lot of other people.
Yeah.
And don't get nearly as good a results as they did. No, it's always been tough for me. I don't think I'm very smart. But I seem to be okay with the numbers. Yeah, I did high unit, 4-unit maths, whatever it's called nowadays. So I did okay with the numbers, but my English was pretty ordinary.
Generally speaking, you got through.
Yeah, no, I did okay and went and did commerce at University of New South Wales. I worked as a gardener for some people in the eastern suburbs, and then after that I actually left and went to England, and I was selling sandwiches between offices, and I'd go into all those stockbroking offices with a basket of sandwiches and sell them. And I actually really, even though I made bugger all money, like a couple of cents, I actually enjoyed it because the more sandwiches you sold,
The more money you made.
the more money you made, and the less sandwiches you sold, then you suffered. And I enjoyed that.
When you were at school, and you went on to do commerce, did you have a feeling that you were going to migrate your talents towards the markets at any stage? By the sounds of it, if you're selling sandwiches, you sort of were a bit undecided still, or?
Well, it's only a thought right now. The first time I've thought after 40 odd years or 50 years, whatever it was I do remember someone saying, there's a secondhand market for books. And of course, there are all these lockers with all the old books that people didn't want. So I went around and collected all the old books.
Did you?
And tried to sell them, just markets and stuff. Anyway, I ended up with a study full of old books.
Oh my
I didn't sell any.
Gosh.
There was no value, but there was that entrepreneurial stuff there then.
If only the internet had come earlier, you might have been the Jeff Bezos.
No, but it was good. I found, it's a bit of a school of hard knocks at boarding school.
Yep.
The kind of people that bully you and things like that. And I was always a very big opponent of that kind of stuff, and I've always was a big opponent of treating people equally and treating people well. And I I don't have people that work for me. I basically work for them.
Yes.
And I'm really appreciative of all those people that have helped me get to where I am. And without those guys, I feel the same level,
Yes.
as them. And it's, I feel everybody should, there's no master-servant relationship. Everybody should be treated the same and with respect.
Yes, yes. Oh, look, I'd like to really dig deeper into that in a moment, and a shout out to all your team at Paradice. So you moved out of that London adventure, you came back and joined a broker, McNaull and Horden, and came on as a junior. And was that the start really of your journey into the markets?
Yeah. So I wrote letters off to a truck. Actually, I tried to, no, that was a few years later when I went to try and get an MBA in America. But it was the same thing. I wrote lots of letters to the universities. I wrote a few years later when I was trying to get over there. But I wrote a lot of letters to all the stockbrokers, everyone. Anyway, I finally got a break. I got a lot of no's. And then I went over to work for McNaull and Horden, and I was a research analyst there,
Right.
researching stocks. And then a couple of months after I started, I got a call from a guy who was a stockbroker, just buying and selling shares for individuals,
Yes.
retail stockbroker. And I thought, that seems like a fairly lucrative way to go. Anyway, I went over there, and then the 87 crash came, and I remember walking down. I'd only been there 4 or 5 months at Hattersley Maxwell.
Yes.
And I walked down to the stock exchange in Bond Street, and it was like 6 or 7 deep of people watching the 25% reduction in one day of the stock market. So then I go back, and there's a couple of guys. We were owned by Kleinwatt Benson, I think it was, half owned by Kleinwatt Benson or something. But the corporate advisors in the Kleinwatt Benson were dealing with me as in their own account, and they said to me, "David, listen, all the big bosses have just had a meeting. They had a phone list of all the people who are going to be here. They tore it up, but we've put it together, and your name's not on there." Uh-oh. Anyway, the lesson from that is don't take shortcuts. Stick to the fundamentals. And it was a good lesson, and probably without. It was terrible at the time because I just couldn't get a job.
Yes.
After I couldn't get a job, and then I finally got a job. Then I took the shortcut for the money, and then lost that job, and it took me a while to get another job after that.
What did you take away from that when you think about it, probably in light of today's world, when there's students trying to navigate their way and they're coming out of degrees and looking for a role? It sounds to me like just perseverance is everything.
Yeah, I think perseverance, but doing things efficiently, I think. And you can persevere, but, if it's not doing it right, it's going to be always tough.
Yes.
And life is tough. Things are tough. After I finished university, I went and worked for a firm called Mercantile Mutual.
Yes.
And I was getting paid $9,000 a year. But then a few of my friends that were from the country that hadn't gone to university were over working with some fixed interest guys. I can't remember how the market looked at that point in time. But they hadn't been to uni, but they were making 100,000 or whatever it was, 10 times what I was making,
yes.
Of course. And I thought, to justify it, I kind of thought, I've just got to keep going, keep doing, keep learning about businesses because, I just love talking about businesses and how they operate and all that kind of stuff. And so, even when I went to McNaull's and then when I went to Hattersley's, that was a bit of a thing where don't take the shortcuts. And don't go for the money, go and get experience and try and learn as much as you can because that retail stockbroker wasn't my thing. I wasn't very good at it.
Yeah. So you went, and out of there you did eventually get a job, and you went down into Melbourne and you went to Ibis World, and that kick-started your career again.
Yeah, so it was a strategy consulting group like
yes.
Mackenzie's. I was writing reports, and I was hopeless at that too, actually. I just didn't have the concentration span to write the whole thing. Oh, God. Anyway, the business financially had a bit of a rough trot, so they pulled me into the management of it, and that was I found that quite interesting, away from just full-blown research into industries. It was researching industries, not so much companies.
More macro
kind of stuff.
Yes.
But like I said, I love knowing how businesses work and, seeing, at the end of the day, you do, and as a business nowadays at our size, you do have to take a top-down view of where things are going. So, for example, we look at the energy transition. We'll talk about it later on, but we look at an energy transition at the moment and about how the data centers are using all this energy.
Yes.
And that there's going to be a requirement for uranium. So we've got quite a bit of uranium. So the reason why I relate that back to IBIS was looking at particular industries at that point in time as opposed to companies.
Yes.
Like we look at companies now and we look at what industry they're in and where that industry is going and all that kind of stuff. So it's important to do it. But I was never very good at it. But when I was down there, I learned about running business, about paying debtors and creditors and all that kind of stuff. And I found that useful. And
The inner workings of it.
Yeah, and I did learn a lot about industry at that point in time too.
Well, then, because you did return back to Sydney after that period, and that's when you joined the State Authority's Superannuation Board, which was responsible for investing the New South Wales public servants' superannuation. Was that a deliberate, right, I'm going to get back into the markets or I'm going to get back into investing? Because if you're at a strategy level with IBIS, you'd sort of worked out, right, well, this is not going to be exactly where I want to be and I'm going to go back in, and this was an opportunity?
No, that's right. No, and it was about learning about investments and making investments.
Yes.
It's very stressful because as opposed to broking, you buy and sell. But I think, I used to take, like even nowadays at $17 billion, if we win just a small amount of money, I still feel the stress because you want to do the right thing by the client. When I was stockbroking, the same thing, but there are a lot of things outside of your control because you're being maybe I'm only thinking this loud, but I'm a stockbroker and I'm taking recommendations from the research team. You're putting people into stocks. Who knows how it's going to go, But I feel the pressure of that as well.
Yes.
Being an investor and having people's money with you and making those investments seems to go better with my philosophy and all that kind of stuff. And so I went to State Super and I was working in their private equity side of things, not listed, but mainly private equity. And we had a few fund of funds and we used to do a few private equity deals. So I used to sit on the board of Australia's Wonderland and a few other things like that. And I was learning a lot about business and taking the responsibility for making the investment.
How long were you there at the superannuation?
About 5 years.
About 5 years.
Mm-hmm.
Did you find that quite formative?
Yeah, it was good. No. It was I worked with a good bunch of people. Once again, it reiterated, do the work, don't go for the blue sky investing,
Yes.
Do fundamental quality research about stocks and the companies themselves. And so it really helped my thinking. I think like the public markets, at that point in time, private equity is a pretty small part of various people's portfolios.
Yes. So because it actually then flows into that appetite for the public markets is where you then went and joined Mercantile Mutual and spent a considerable period of time there, again, running small companies.
Yeah, so I was lucky enough to get a job over there, Mercantile Mutual, which then became ING Group. And I was running, like I said, small cap money, investing in listed small caps.
Yes.
So going and seeing companies was not a chore, it was a passion to go and talk to companies about how they operate and look at all the interesting individuals you meet out in the marketplace. I used to love going to Perth and going to the Euros Rottnest conference.
Yeah.
I used to love going to that thing because you'd be sitting there and you'd be listening to the company after company, and it's a great environment coming in and presenting. And I came up with some phenomenal ideas. I remember Linter Gas, and there was no one at this presentation because I thought it was a boring old infrastructure kind of thing. And I'm looking at it and I'm thinking, I can't quite remember my thinking, but I'm thinking, hang on, if they've got a fixed cost base, if they can keep jacking up revenue, a lot of it goes to the bottom line, and they've got reasonably good growth, and I think, and they can buy things and add the revenue on and not take a lot of cost and all that kind of stuff. And I thought, yeah, and we did really well out of that. We had 6 years of just crazy numbers relative to the benchmark. And
I understand from what I was reading, you did around 28% annually.
Yeah, it was crazy over that 5-6 year period. It was amazing. And we had some good years and bad years, but if you invest in the right things, then the bad times are opportunities to bulk up on those kind of things.
Yes.
And so
do you reckon, though, with Mercantile Mutual, this is where you really thought, right, I've actually found what I'm good at, what I love, my passion, because ultimately the next stage for you at that point was then to go out on your own, in essence, Is that the way that you were thinking? Like you sort of felt like your trainer wheels were off a bit and you're ready to roll?
No, I never thought that's what I'm going to do this.
Yes.
But then I had really good numbers over a 5-6 year period, and I had a few people that wanted to support me.
Yes.
And they couldn't put the money into ING Group because I'd built that up to be quite a lot of money. I think over $1 billion at that point in time.
Right.
Not a great deal through performance. So I thought, okay, well, I'll go. And I had a fairly good indication that people might back me. And of course, I remember my briefcase, and I went up to see a consultant who was advising the clients that I used to run money for it. And I said, what do you think? And they said, no, we don't think you're going to do any good. So we're not going to back you. I remember going down the bottom of Pitt Street, standing at the bottom of the building. Oh, my God, what have I done? I had debt on my house, I didn't have much money. I was getting paid $112,000 or somewhere other at ING Group, so I just didn't have anything. And I'd taken this massive risk with a young family and debt. And, it was a tough gig for a little while.
So that's when you left Mercantile Mutual and you did go out on your own. And that's often the question to ask is that formative period where you decided to, right, I'm going to go my own. It wasn't necessarily the way I planned it, but I'm doing it now. And guys like a consultant say, oh, sorry, Dave, the support levels aren't here. Yeah, go the next door.
Yeah. Well, I was lucky. I came across a guy called John Nolan, who was well known back in those days for giving various individuals a break, like Peter Morgan, he gave a break, and those kind of guys. Yeah, Peter Cooper, he gave a few of us that kind of break to get out and have a crack. But it was not, we won our first money on the 6th of March 2000 from Rest. We won $30 million.
Yes.
And
which was huge.
Yeah. But it was like, I remember going and doing the presentation, I was sweating like anything. And I still had costs that were above. I had an analyst working with me, Alan Crozier, and then I had costs that were above the revenue.
Right.
So it was very crucial that we did well.
Yes.
And the first few months were tough. It was the end of the biotech and the technology bull market in the early 2000s. And we had the first 3 months, because the first period, when you have these businesses, the first period is so important to get good numbers for the longevity of the business.
Yes.
But no, I was by myself. I didn't have any other funding outside. I didn't have a great deal of money myself. It was costing me $165,000 to run the business a year at that point in time. And I was making 150. It was 50 basis points by 30 million plus a performance fee. So it was 150 grand in revenue.
Yeah.
So I was losing money still, and I didn't want to go marketing because I wanted to pick stocks and get the numbers going. It's always been the case for us. It's not so much about raising the money because we think the money will come with the performance if we can focus on the performance.
Yes.
So, I had some rough investments at that point in time and, some good ones, some bad ones. But what happened was in about June or July, the equity market started cracking big time and the techs went down and we had some really good solid stocks and we had a phenomenal first year.
And away you went.
Yeah, then led us to, we raised $200 million in the first 2 years from our institutional client base who have been fantastic supporters of ours.
Yes.
Rest was our first one. Then Australian Super and then CBUS and then a host of subsequently built supporters and then the other funds of supporters, and it's been great. But we managed to get some good numbers, but then of course that $200 million fund is now $2.7 billion. In 2014, we gave $800 million back because we thought it was too much.
Yes.
So it's been a great story of compounding.
Amazing.
Yeah.
Just going back to that formulation of your business. So when you gradually go through this process, I'm interested just to hear what you think around. It's often said that funds management businesses are largely only as good as the clients that they go through and that they ride the journey out with you. It sounds, just from what you've just said then, with the institutions that came on board, they all came on board with you for a journey and they've been great clients to have. The importance of that and the other parts of the business that you could see were your DNA, I suppose, to say, when you look at performance driven, why you were doing it to generate the wealth for these investors. Did you have some sort of principles that you were following at that point in order to create, from the outside looking in, Paradice Investment has got a magnificent culture and it's a business that's been experienced longevity through that.
Mm-hmm.
And these founding sort of principles,
So, no, as we know, life's not about what you can get away with. It's about always doing the right thing. And I do remember there was a mistake in one of the management agreements whereby the performance fees were calculated at the FUM at the end of the year. Anyway, a client had put quite a lot of money just in December, and so it increased the performance fees to be quite a lot of money. It actually made us going from a loss to a profit.
Right.
I didn't realise about that nuance.
Yes.
And he calls me up and he says, look, the fee's $1 million, but this is the problem with the calculation. You can do what you do what you think is right. In other words, you can take it or you can give it. I said, well, it's crazy. Of course we're going to give it back. There's a mistake in the agreement and the agreement doesn't make sense. You need to do what is right by the client. You know? And we've always had a philosophy of doing, like I said, what is right, not what you can get away with. And that goes also, not only our clients are our lifeblood and our staff are our lifeblood. And like I said, every time even nowadays when we're winning money, I still feel really nervous, because I want to do the right thing by the clients. And so it does to have that philosophy where, and I think it comes to also for us, we're a small cap place and it's mainly absolute return type focus, wanting to buy investments to add value to our clients. And in other words, looking at earnings, looking at PEs, looking at enterprise valuation, looking at net present value, looking at all the things that drive stock prices up or make good investments. It was crucial that we stuck to not the new shiny thing that's come along and do fundamental research. And I think that particular culture has gone through the organisation, is still there 24 years later, of trying to do the work, and we spend a lot of time seeing companies. And I've set the business up such that, we try not to have any internal meetings between 8 in the morning and 6 at night, so everybody's available to see companies. And I don't care whether people are in the office or not in the office, because I don't need to keep an eye on them, because I know the people that we've employed are doing the right thing by the business and doing the right thing by the client. So there's a lot of trust there.
Yes.
And, people take that responsibility on and do the right thing.
Well, it's outcomes driven, isn't it, really, in terms of the performance that comes on from that. One of the things that I picked up with regards to my research was your approach to company management meetings and asking the questions that are needed. And it seems that you've started that, and just from what we were talking about offline, your guys are very good at getting to the point in terms of what a management meeting's about.
Yeah. It's not a job for all of these blokes. They just love talking about stocks.
Yes.
At the Christmas party, we used to have our partners along and just chatting about things and pretty boring, mundane conversation. Talk about a stock. Everybody, all the fund managers, like all their faces light up. Oh yeah, that one, talking about that, talking about stocks. And no, we like to do it. And the company visitation program, like it's little issues that you just know when someone is not telling over a number of years. When people are not telling the truth, or that what they say they're going to do, it's going to be hard to do.
Yes.
And you just, after many years, that. But I also think a lot of that strength of being able to work out, is this a good or bad investment, is inherent in someone's personality.
Yes.
It's not, it can be learned. You can learn a lot of that stuff. Like a lot of people try and follow Warren Buffett.
Yeah.
Right. And that's the other thing, is we don't want to follow people. We want to make those decisions. We don't want to be followed. We want to learn things, but we're not going, oh, that guy's making a good job investing that way, let's go and do that.
Yes.
We have our way of doing things, which is going out and picking the stocks, doing the numbers, working out whether something's cheap or expensive, and then having a real crack at it.
Yes.
We don't want to do it from the edge. We want to have if our small cap fund has got $1 billion or whatever it is in uranium, well, our clients are paying us to have a crack.
Yes.
But we hopefully have done enough work to work out whether something's good or bad.
Yes.
And so that's some of our downside protection. And the other thing is in downside protection is when you make a mistake with these investments, a lot of people hold, a lot of individuals, like my mum, for example, she might have an investment which might go bad or not great, right? But she'll sell something that she's in front of because she doesn't want to realise a loss. It's always better to sell the bad ones.
So you get rid of your losses and you run your winners, basically?
Well, I think, the really good investments over a long period of time are the ones that have been run by really good management and have been going for a long period of time. I mean, I haven't looked at Reece for a long time, but they're a plumbing side business. It took us a long time to build a position there. The only way I could go and see the management was to get up at 6:30 down in Melbourne and go out to his Dandenong branch where he is and walk around the store with him and talk about the company. This is the Wilson brothers.
Yes.
And, we love that focus. Western Australia's got all these blokes that are just phenomenal. I won't name any because there's a lot of them over there, which we're close to, and they do I love the Perth people. I love the Western Australian guys because they're out there having a crack. They won't die wondering.
No. It's interesting with the way the business has evolved in terms of you've now released 6 funds, but there's a capacity constraint issue that you put forward with each of them in terms of it seems to be over time you've been able to close off the fund and allow it to organically grow.
Mm-hmm.
And that seems to be part of the process to date. And I was just looking is this part of the DNA that you've grown over time?
Well, it is. It's always been performance orientated.
Yes.
And we have performance fees on our funds, and so that focuses the mind a great deal about getting good long-term returns.
Yes.
And so that's very important. I mean, the market has changed a bit. The government, in their wisdom, I'm not sure whether it's the right thing or not, have tried to encourage a lot of the super funds to focus on cost, not net returns. I mean, they focus on net returns, but the poor super funds are trying to deal with this regime that the government have put in. But we still focus very much on performances. We've got to focus on performance. All our super fund clients are phenomenally supportive and really good operator, and they like the net return situation because they realise that they also have to deliver good net returns to them. So we also need to, and the reason why we've had these other products is that they're growing at a phenomenal rate, some of them, and they need to find fund managers to invest. And over 24 years, we've given them a pretty good experience, and there's no surprises with what we do, and we're focused on doing the right thing, and they've continued to support us. But the market has changed a bit. And I do respect a lot of those funds out there that have capped for returns, because they could go and just continually just raise as much money as they can and do the wrong thing by the initial clients. We don't want to do that. Whenever if we see a fund that we think have got too much money, then we'll close it. Like our Aussie small cap fund, that's quite a big fund now, so we have not been encouraging investments in that fund for for 20 years actually.
Yes.
There's been people that have been coming in and out, and the guys that run that do a phenomenal job, and I continue to see they will, even though at that size, the way they invest. I set up recently a new smaller company opportunity fund, which, because that fund is big and is closed, I've opened up a new fund which is run by really Sam Theodore and Michael Pete, who are doing a phenomenal job. It's a great opportunity to invest. And they were referred to me by Adam Harvey and Rishi Kilnani, who have run that other fund for 15 years, the big fund.
Yes.
And so I did a lot of work on him, and he comes with good credentials, both from Adam and Rishi, who are good friends of mine, and I love them.
Yes.
So, he's done a phenomenal job, but because that fund's been shut for so long, we did open that one, and we will limit the funds in that one to be $1.5 billion.
It's an interesting point when you talk about your portfolio managers. They're all generalists by trade rather than sector specific. Would that be fair to say? They're business analysts, they're general analysts, or general.
Yeah, it's interesting having these money management businesses and the choices people make. Many years ago, for example, I saw a small competing manager. This is 15 years ago maybe. He employed a media analyst out of a broking firm. And I thought that's going to be a bad decision because your portfolio gravitates towards media, for example. And that's exactly what it did, free-to-air back in those days, which are yesterday's story. And, of course, that fund manager is no longer around. I also saw a fund manager once who had 3 equal partners. He had an MD. As soon as he has an MD and he hasn't even got any FUM or a CEO right from the very start, it means that guy is going to start having meetings, to justify his position. And so I'm a big believer in not having meetings that distract the fund managers from picking stocks. And I looked at that business and I thought, they've got 6 partners and they took, I think, $1.5 billion. It was an Australian equities portfolio. They gave a massive discount, did it at 15 basis points. This is quite a few years ago.
Yes.
And if you think you can do well, I don't know why you would discount. You know, if you think over long term you can do a good job, you wouldn't discount. But they discounted on $1 billion. They had a cap of, I think they're going to cap the fund at $3 billion. Then, of course, they did really good numbers, and then another $2 billion came in at average rates. But then, of course, all the partners are saying, who made the decision to take that early money? We've done a really good job and all this kind of stuff. And so, yeah, there's little tweaky things that make decisions you make, which make a rod for your back if you're not careful. And that's why we employ generalists, because like it doesn't matter whether you're in Western Australia or whether you're in New Zealand or whether you're in Sydney looking or Melbourne looking at retailers or resource companies, you want to just enjoy looking at all kinds of stocks because we're not steered in one particular direction. We've just got the whole equity market to pick investments.
And the portfolio can move depending on where you want to go.
Yeah, exactly.
Yeah.
You know? And it's all about having a passion for it's not making money. It's a passion for making good investments and seeing how businesses run, which then, of course, results into increased returns for our clients.
I think the old saying, quality is remembered long after price is forgotten.
Yeah, that's right. or price is what you pay, value is what you get.
Yeah. So the business keeps evolving. And like I just wanted to sort of, from the outside looking in, when you look at the number, $17 billion, it's a frightening amount of money. It's a lot of money, right? For those that aren't in the industry, that observe and respect the fact that it does take an investment professional to be able to manage that sort of funds under management or a team. When you look through the way that Paradice has evolved, first fund 2000, second fund 2006, third fund 2007. So we went small cap, mid cap, large cap. Then we hit the 2008 GFC. Now, based on the fundamental stock picking, bottom up approach, tell us a little bit about the way that you looked at the GFC. And I'm just curious here, when you look at investment management, the power of being able to move to cash or staying invested in that situation, in the lead up to a GFC or in the lead up to an 87 crash or what have you, when your gut feel is what it is.
Yeah, but you never know what's going to happen. And people pay us to invest in equities.
Yes.
So when I set up, I made sure that we're only going to 10% cash, for example, maximum 10% cash in our portfolios. Right. And I also didn't put a restriction on turnover because, in other words, they might say you can't have more than 20% turnover in your portfolio because, like I said before, if you make a mistake, its best thing is to sell it. Now, if you've made an error and you're up against an imposed mandate restriction of 20%, you don't want to sell it. You still got this bad position and you want to try and sell the thing and you can't because you don't want to breach the mandate.
Yes.
So we don't have turnover restrictions. But it's really, the whole, I suppose, focused on the fundamentals. So that when you have a rough time, and in 2007 was that was about a period when I transitioned to Adam and Rishi, who started running the fund then.
Yes.
They were working with me for quite a while and they were working with me for a long time. So what I do is I work with these guys for quite a long period of time, get to understand how they operate and then give them more and more responsibility, more and more rope. And, I think it was quite interesting because the GFC leading up to it, there's so many companies that I looked at that were just full of crap. And you had big companies in those days, Open Telecommunication and valued at 1.3 billion went broke. There's a lot of companies that went broke. But out of the ashes came carsales.com, Seek, realestate.com. All these really turned out to be phenomenal businesses, right? So it created a massive opportunity for people like ourselves that, I love it when we take the market on. When the market's selling, everybody's getting out, and you look around and there's just phenomenal. I don't love it when that happens. It's pretty stressful.
But the opportunity set.
But the opportunity set is phenomenal.
Yeah.
And if you have the right people that are in there, they don't mind to take the market on. They don't want to do the momentum crap.
Yes.
And you don't get these opportunities to buy these things very often. I think just a couple of months ago there was the market. Well, actually, you remember when we didn't get it, but remember when oil went to negative value?
Yes. Yep.
I mean, it's interesting. I know of some people that actually made money out of that, but then they've lost it subsequently because they didn't know about measurement of risk. They think they're special and they can do it every day, but that kind of stuff is not is you've got to know your limitations as well. And like I said, when you make a mistake, sell it. But no, the GFC created a great opportunity for us. We actually lost some money just before the GFC.
Right.
We're underperforming because the equity market was quite speculative. We will underperform when it's a speculative market. But then that following year, we ended up being 30% above the stock market because we invested in good quality stocks. We didn't get belted by the riskier things. And, we could wake up. I always used to say I could lock the portfolio away and go away for months on end if I wanted to. And I'm happy with it.
It was a really strong portfolio.
Yeah, it always. I mean, that's you got to feel like, companies that have got earnings, companies that are growing, companies that have got good management, companies that have got moats. It's about quality. Yeah, about quality.
And that seems to be, that resonates through the whole selection process, as you've spoken about earlier. Like the business is growing around that, right? And so each portfolio is robust, is sleep at night style investing, where you're generating returns over the medium to long term.
Yeah, exactly. And it's a focus on the long term. And like I said, knowing, guys that have got a passion for talking stocks, I mean, a lot of things are about marketing, right? But I think if you get the engine right, meaning the manufacturing right, meaning the stock selection right, meaning the performance right, the rest should generally follow.
Yes. So in 2009, coming back to that capacity, my take on it is you soft closed 3 of those strategies. So the 3 domestic equity strategies were soft closed, and then they just kept growing over time organically. And then you did start in a global small mid-cap strategy.
Yeah.
And that was the first time that Paradice moved into the global sphere.
Mm-hmm.
Tell us a little bit about that. You just applied your way of doing things and said, right, well, let's look at this on a global basis.
Well, we had pretty good performance here, and our funds said to us, look, if you see a small cap manager, because small cap managers are unique. Actually, fund managers are unique individuals. But if you find a good one, small one, let us know. Anyway, my wife lives in Denver, and I used to go there in January, February when it was holidays over here and it was quiet here. I said before I could only have a certain amount of cup of teas with your mother-in-law. Right? So I used to go and ferret all the fund managers. Oh, God. My father-in-law once saw me quoted in the newspaper and printed that comment off and came and held it to me at breakfast. What do you mean? Anyway, so I used to go and see the fund managers, and because I like talking investments. So on the holiday, I'd go off and trottle. Anyway, I came across a guy called Kevin Beck. He's a really good operator. He runs our global small cap fund.
Yes.
And we got him over here, and Host gave him some money, and Rest gave him some money, and he started with $150 million or something like that, and done a really good job. And recently, the market's been tough on him just because there's a certain amount of speculation in that market. But he's a really good, safe reliable pair of hands, and does a great job.
You mentioned that earlier, actually, David, that the Paradice funds may tend to just sort of level out in periods of speculative markets. Do you want to expand on that a little bit more?
Well, it's because we're not buying the froth of the blue sky. And it is interesting because, so we've got this small cap opportunities fund, and we've got a long short, what we call Equity Alpha Plus, which has done a phenomenal job. And, you'll get some bad months and good months, but you just got to stick to doing the right thing of picking the good stock so that when you do have a bad time, you don't get belted. There is a tendency for a lot of people when it's going well to go and invest in the bloody speculative stuff because that's when the money's around to invest.
Yes.
Right?
Yes.
Say, oh, cricky, the equity market's going up, 30% per annum, whatever it is. And so all this money from the investor universe are looking for homes with good performance numbers, but they might not necessarily be long-term the best place to go with your money,
Yes.
And so there is a tendency, I'm sure, for a lot of people to take a lot more risk on and get those numbers and attract money that's coming in. We don't work like that. We're not distracted by the noise, and we don't mind taking the market on.
No.
We don't mind having a reasonable crack at stuff,
Yeah,
So,
yeah.
And it delivers well. I mean, like I said, we probably could do better on the marketing. It's like peeing in your wetsuit, it feels nice and warm, but no one really knows outside.
Great analogy.
I don't do that, but because I do surf a lot.
I mean, I suppose flowing on from the starting that global small mid-cap strategy, you then set up a US presence and in Denver. And that really did sort of cement a global aspect to the business. And I mean, you manage a lot of money out of there now. Is it what, $1.5 billion US, something like that?
Yeah, something like that.
Yeah.
So that was a lot bigger, and as were some of the other funds that we've got. They're a lot bigger, but this whole move to passive, as you know, the top 7 stocks of, so when you're investing passive, you're putting money across every single stock in the index. And because as those top 7 stocks get bigger, they perform better, more and more money goes into that side. Whereas the active guys over the long have not had a great time of it. And what's happened is you have value and you have growth. And value are kind of guys that are focused very much on valuations, whereas growth, buying the growth stocks and don't mind paying a bit more for a particular company that's growing a lot than what the value guys would. Now, those particular fund managers have had a good time of it over the last quite a few years, 10 years. And so that means that there's hardly any more of these kind of contrarian value type funds around, right? But, you know, everybody has to evolve on their thinking. And that was one of the good things about it. When Adam and Rishi came on, you know, they were kind of younger types, you know, and my job is to get really good succession planning happening in our business and to have people that are not stuck in the way of looking at things, whether it's value or growth or kind of stuff. We're kind of style agnostic. We're just trying to find good investments. And some of those good investments might be expensive, but they might be growing at 30 or 40% per annum. And that's what's happened with the top 7 stocks.
Yes.
So it is a kind of very, very fragmented market at the moment, but we seem to be doing well, holding our own. And what's good is, you know, we're very focused on downside protection as well. And we've done well in the down markets. And so clients feel safe, and that's why they've continued to back us with $17 billion.
Absolutely. Just to move a little bit to the left field here, it sort of brings us up to 2017. It was a pretty big year for you because, you know, here we have the Paradice Investment Management business growing. You've got a number of funds that have been launched and some have soft closed, and you've clearly been externally contributing a lot to community and to society and in different ways. And you're awarded an Officer of the Order of Australia for distinguished service to the community through philanthropic contributions and charitable support and to business and commerce in the field of investment management. Now, that is a big honour.
Oh, well, I mean, a lot of other people have got it too. But I'm not sure whether I deserve it just because I might be philanthropically minded. It's the people who are out there on the street, you know, like saving stuff, who are doing the actual work. They're kind of more, I mean, just because I might have a tiny bit of access to some money that I actually don't wear the lapel thing because I think maybe there are other people that probably deserve it better than I do.
I suppose from that perspective though, and it's very humble of you to have that view, but you were acknowledged and reflected a way of life that you've contributed to society, which I thought from a perspective of your journey, this is quite a moment where you've been highlighted it from the outside looking in.
Hey, look, it was a nice thing to win and I'm very appreciative of it. And yeah, I kind of feel everybody needs to give back. And I give back to the local community. I give back to down here. I give back to the arts and humanitarian causes and, you know, give money to a thing called primary ethics, which is teaching young children the difference between right and wrong, morals, ethics and things like that. And it's about, like I said, continuing doing the right thing by people, you know, and being respectful and having integrity and being respectful of your work colleagues and other people around you. And so, you know, I kind of support a lot of that stuff.
Yeah, yeah. And there's a lot more to that, but I just noticed that, which I'd like to just cover off on, but at that point, your business is in full swing and then this comes along as well. And I just think, well, that was a sort of when you reflect at that point, because then you go on in 2019, you've got the Equity Alpha Plus fund launched. Mm-hmm. And then in 2020, we've got the Global Equity team launched an international small cap strategy.
Yep.
And then 2023, we've done the small cap, which you just referred to, the small cap opportunities strategy, which just launched. And that's where we've got Sam Theodore as the portfolio manager, which, as you say, has got off to a good start because it's well outperforming the index.
I mean, look, like we all get in. I get in around 6:45, 7 every morning. I love it. You know, it's nice and quiet and get a few things done. But everybody else is in there too. And they do it not because they have to. No one has to. I don't care whether people come to work or not as long as they're doing a good job.
Yes.
But they do it because they love getting up and getting amongst it and looking
Yep.
at the stocks. And like Tom Richardson, who runs our Equity Alpha Plus, there's always there. I don't know what time he must get there, at 6:30 or 6:45 or something. But, he's done it. It is about doing the work. I love to see these guys going out and doing company meetings. During like each of those periods when you talk about the GFC, 2007, when all the budgets, everybody's pulling their budgets, I'm saying, get out there, get on the planes, go out and see the companies. This is the time when we should be getting amongst it. We shouldn't be cutting costs when things are bad.
Yes.
When things are bad, I love to get amongst it.
Yes.
And it's a contrarian type of view, but it's boded as well for 24 years, I suppose.
Just on the Equity Alpha Plus, that fund has the ability to short.
Mm-hmm.
Was that a deliberate, obviously it was a deliberate decision, but to move away from long only and have that element to it?
Yeah, I think so. Yeah, it was. And because those got about nearly $8 billion in that. And there's what is good about the business at the moment is because of the passive move from passive to active, we've lost a bit of money here and there, and also because of this thing called Your Future, Your Super, which has been implemented by the government to get the various super funds to reach a certain return. Means they've taken a bit of risk off the table, so they move it from, say, equity mid-caps to some other large caps, whatever it is. So we've lost a bit of money with that. But that's actually not a bad thing in the end of the day because it's given us capacity across every single product.
Yes.
And Tom is the same as all the other guys that, he'll see things that he might not like. And so we'll
Take advantage of it.
It's a different mindset,
Yeah.
and the focus is much more on the long book. But, every now and then there'll be something worth shorting. I mean, right at the moment, there's this big data center thing happening. Everybody's buying data centers.
Yes.
Now, I don't know what happens in 5 years' time, but there's a lot of speculative money out there.
Well, that's a good place to just move in terms of, like, we've talked about where the business is at now. What you're managing in the US, what you're managing here in Australia. It's all up, that 17 billion mark. The next question is logically, how are you seeing things going forward? And the general market questions are everywhere about the recent election and the Trump years that are coming upon us. There's that, how is it going to affect domestic and international markets? How's it going to affect the small cap sector, for example? And then we've seen the movements in the Russell lately.
Yep.
That sort of thing. Obviously, you guys talk a lot about just general things, but having said that, you're also bottom-up stock pickers.
Yeah.
So have you got any sort of insights into that at the moment, David?
Yeah, so we've got Australian large, mid, small. We've got a global mid, small fund. We've got an international fund. Our only spot is in this global equity area, which is what we've been looking at doing for the number of years, and we've seeded a product in the US, which is going very well. So that's what they call a big bucket product. That's a $20 billion product.
Right.
And of course, to be investing, you do need to be conscious of a lot of the top-down stuff. That market has become quite centralised to what they call quality growth. So there's a lot of guys that are buying the top 7 stocks and getting good performance from that. And we're kind of looking at that area as a good place to be. But when we invest in that and we invest in everything, we do have to have a view of where things are going.
Yes.
And it was whoever you see around the traps, they talk about the market, being poised for a particular growth. And you do see some of the guys that have been supporting Donald Trump, and, there's a lot of kind of Elon Musk and those kind of things.
Yes.
So they're all pro-growth, and they think it's going to be quite a significant next 4 years. I'm not sure whether this is true or not, but I heard that when Australia, as it AUKUS, the submarine thing, I think the US were looking favourably on us. And I think one of the ambassador or someone like came up with a great idea. Let's get Greg Norman to write a letter to Mr. Trump. And supposedly Mr. Trump looked at the letter and said, "Oh, shivers, we can't do that to those guys down there in Australia." Now, highlighted the problem, whether it was Greg Norman or not. But anyway, and I'm not sure whether it's true, but there is an element that a lot of the people that support him around the traps, the economy will gravitate. And if he's got a lot of support from a lot of those big dogs over there, then it could be pro-growth. Everything could be going up.
Yeah.
So, inflation has been an issue, and that's probably one of the reasons why he did win it. We do feel that rates are probably going to possibly move down over a long period of time.
Yes.
We do feel that growth is going to be reasonably positive, as I said before. We feel that there is, I mean, it's interesting that Elon Musk sells 40% of his cars to China. And so is Trump going to do something to China? I don't know.
Yes.
And China does affect us here in Australia, but it's a massive economy and it's a dynamic economy in that they can make decisions very quickly. So, I think for commodities in that kind of environment, whether it's copper or uranium and that kind of stuff, it's quite positive, and that's obviously positive for Australia, which is a commodity-based economy. I think short term, it's going to be tough because you've had a pretty big run up in the equity market.
Yes.
I think for the end of June, the stock market was up like 26% and around about that period year on year from end of October as well. Yeah, you're probably going to get a bit of a correction timing kind of thing at the moment, but especially after all the heated stuff after the election where you saw a very strong market. But at the end of the day, things do come back to value and come back to fundamentals, and as long as we continue to do that, then hopefully we'll be dragged up with the rest of them and we'll continue to perform well. But no, we're reasonably positive.
You talked about it earlier, you touched on it earlier with regards to like themes, for example, energy transition, the data centres requiring massive amounts of energy, and this has obviously brought nuclear to the fold and uranium as a subset of that. What other sort of themes do you think, without giving away the house secrets, what else are you looking at in terms of that light?
Well, technology is a big game changer, obviously, you look at the big stocks now in the world and their technology. But companies like Brambles, which have now got great management, are using technology to their benefit. And there are businesses all over the world and in Australia like that, where they're using technology to their advantage. I mean, this is a basic thing, but years ago, you used to have to go and get your boarding pass from the desk, whatever it is, all that kind of stuff. Look at it now, you don't even have to worry about that. It's all on your phone. And so technology is going to make a big difference to the way businesses operate. And whether it's trucks driving down the road, they can analyse average speeds,
data.
Data's a massive, it's like the next oil. So it provides opportunities. That's where a lot of the opportunities will come, where you'll get cost bases being reduced as technology making things much more efficient, like the Brambles situation.
Yes. It's really insightful. The ongoing dynamic nature of the markets means you guys and the general nature of the way that you approach things, it means that you're going to be across all of these different subsets, sectors, what have you, in terms of just identifying where there's a fundamental position that should be taken advantage of, or, from that bottom-up analysis. Do you think that over time there's going to be more emphasis on commodities, for example, outside of tech? So we've got technology, but, coming from a WA base over here, what do you think about where we're sitting?
Yeah, no, I think so. No, I think commodities is not a bad place to be, and our portfolios are structured accordingly. AI may get like, as a money manager, some of our biggest threats are quant side of things and AI, and they say that there's some technology out there that can listen to a CEO making a quarterly presentation, and the computer will pick up the tone of the voice and the words, and work out whether it's negative or positive, look at what was expected, and then automatically putting a sell. They'll go and automatically do the sell recommendation, or not recommendation, but they'll go and sell the stock automatically. Or, for example, you might have a fish. I heard about this. This is an actual story. I heard about there was a tiny little rural newspaper like the Scone Advocate in Chile about some fish disease that started. It was a tiny little thing. Anyway, of course, you get these things that can read 90,000 things in a second, and of course it then automatically goes and you start selling an investment over in Northern Europe, which is related to fish farms, or Australia. So I'm kind of hoping that AI, well, not hoping, but that any benefit like from AI and from all of that automatically competes itself away.
Yes.
And then it comes back to the person making a judgment call on particular information
that they've received through AI.
That they've received. And so, I do think that there is a place for active management. The AI thing is definite there. It's going to be possibly more of a facilitator of things as opposed to, I think there are some situations that do remind me back in the 2000 and the 2006 where it's quite speculative.
Yes.
And, there's no real competitive advantage because AI will get any competitive advantage away. It's more of a facilitator of things as opposed to and kind of end in investment,
Yeah.
But the use of power and energy and all this stuff and phones and electric vehicles is massive for things like copper and uranium and those kind of commodities.
Have you developed a further view on where gold's going to end up?
Oh, mate, I don't know. It looks like it's going up. I don't know. I got no idea. I know Look, it is interesting because we've done quite well out of a lot of gold investors over in Western Australia. I used to love going to Diggers and Dealers and seeing all those blokes.
Yes.
Raleigh and, all those guys. And Nick Georgetta, who used to be around years ago, and all the people that have come out of that organisation and sprinkled amongst other organisations. Because, they're out there. It's kind of like when I started up and it was bloody tough. They're out there finding resources and, it's getting more and more competitive, and you have to go out and do the shoe leather like we all have had. You got to take some risks on.
Yes.
People that work hard take the risks on, do the shoe leather. I respect. And a lot of those guys over in Western Australia do all that. I love them, and I know Adam and Rishi love them too. But, I don't even know about Bitcoin. Like, where's Bitcoin going to? My gut feeling says it's going up, but that has an effect on the gold price, and silver is also, is used in a lot of these things that are being made with it, solar and all that kind of stuff. But no, I feel it seems to be going up. I can't really justify it, but we do have an exposure to that area. But I would be reasonably positive towards gold and silver. Yeah.
Oh, good. Look, I just wanted to also cover off on, I did allude to it earlier, but if we move on from the business, you sit on the board of Future Generation Australia, which, for those who are not familiar with, is a listed investment company that donates their management fees back to children and youth at risk charities. And a shout out to Future Generation Australia. That's a very important organisation or business, part of Geoff Wilson's.
Yeah, no, it's been great.
Wilson Asset Management, yeah.
Oh, no. Geoff and I used to share an office together
when
I first started and when he first started. And we spoke about this and he highlighted a few things over in America, like the Robin Hood situation where as fund managers, we manage money for nothing and we give back the management fee back to charity that we would have earned from the clients of Future Generation, for example.
Yes.
And so when he came and approached me, it took me 30 seconds to say, well, not approach me. When we were talking about it, it took me 30 seconds to think this is a really good idea and I want to be part of it. So
yes,
we were one of the founding fund managers to be part of it, and it's been I think it's 84 million, I think it is, or something to that amount that's been donated over the last 10 years. So
it's a phenomenal contribution.
It's been really nice to see, and they do a fantastic job. They're very thorough in their analysis and their analysis of the funds that we donate to and other ones. But I love being part of that stuff. I love giving them back, and Future Generation is, as it says, it's for children's charity, and we do support 14. I think it's 14 of them. And I love being part of all that stuff. It's really good.
Yeah, look, and as I say, shout out to them all. Great bunch of people, and to Geoff. The other roles you have, you're currently chairman of the Taronga Foundation.
Yeah.
The Taronga Zoo.
Yeah, that's right.
Yeah, which is obviously an icon here in Sydney.
Yeah. No, and I do it because of the conservation work they do and climate change stuff they do. So it's been an iconic place for a lot of Sydney-siders and outside. They do a fantastic job. Their passion for what they do is really good. Currently trying to raise some money for a vet hospital both in Dubbo and here in Sydney. We're trying to raise $80 million. Yeah, having worked with them, I love their approach, and they're, like I said, doing the right thing by the general environment. A lot of people don't see that.
Yes.
So I do it for the environmental side of things. A good bunch.
Oh, absolutely. And you're also supporting a number of charities across, you mentioned or alluded to it earlier, the humanitarian, the arts, environmental and education. It does reflect back to that AO. Are you continuing to do that drive externally to the communities and charitable? And I mean, hats off to you in terms of how long you've been doing it for. And it clearly is a passion of yours, and it does come through.
Well, like Gretel Packer made a good point to me once where I got onto the zoo because of her. But I ended up helping the gallery out here and I've Sydney Theatre Company, a few other things. But where, you have some of these businesses and that does lift the quality of the community. My thing is about lifting quality of life for the community. And, it might not be here in Australia. We support an orphanage in South Africa for children who had AIDS, parents with AIDS. And I do stuff all over the place. A lot of it is focused here in Australia. But no, I think everybody needs to give back and
Yes.
do the right thing by the overall community. What's the use of being the wealthiest person in the graveyard? So I think it's really important to give back. And I noticed, Andrew Forrest, Nick Forrest and Jen Reinhardt, a lot of those people from over in Western Australia have done a lot of that stuff too.
Yeah.
So I think they obviously have the resources to do it, but no, it makes me I feel good about it, but I'm doing it because I think it's
important.
It's an important thing
Yeah.
to give back because there are a lot less people doing a lot less fortunate than us and than me. Yeah, really, really supportive of people that do that.
Good on you, David. I just wanted to also have a chat to you briefly about, and this came out of the research that I was doing, but it's your attitude towards health and work-life balance. I mean, you've had a couple of scares yourself with regards to cancer, and that has an adjustment on life that you've been able to take on board and adjust your way of doing things and your outlook and the way your attitude is and that sort of thing. But also finding that balance. Now, building a business like you've done is no mean feat, but you've been able to do it through this obviously generous attitude towards community and well-being. But then you've been able to balance that with family, with your love of the bush, with the countryside, and then not to mention your other passion, which is polo.
Mm-hmm.
For the listener, that's not water polo, that is polo with horses, of which you've been a major contributor to that sport. Tell us a little bit about that.
Well, it's funny, because I can call the guys that I work with about anything 24 hours a day and they'll get it because they're onto it.
Yes.
They're onto it. And it's because they're passionate about it and because they're focused on it. But I also don't mind if they're going off to live in France for whatever, because I know that they're focused on the client money and they love doing that. It's not a chore for them. But, there are, I'm still as frantic as I was before I had cancer. I don't know about that. But it's interesting. I got a guy called Nick Gorman in to talk to our guys about mental health.
Yes.
And I thought it was really good. He was really good. He wrote down the top 5 things that you kind of feel like you're missing out on, for example. And I do a lot of exercise. I actually have been, for a number of years, I was the number 1 amateur polo player in the world, but it was nothing to do with my ability. It's just that I play with a lot of good players. I'm freaking hopeless at it. But anyway, no, I try hard. It's funny, I try to be really involved and try to lead it from the front, and I try to do that, with work, you got to be there. You can't be a passenger.
No.
Right? If you love what you're doing and you're getting amongst it, then it's not a burden. And people see that and people get lifted up. And I think that's what happens in the polo team and possibly happens in work. And Nick came in and said, list these things down. And exercise was one thing that I've recently because I've been flat out doing a few other things, I let it go. And I thought, hey, buddy, right, I've got to get up. I'm going to get up at 5:30 and make sure, because as soon as the day starts, it's freaking hopeless.
Yeah.
So I'm going to bed earlier and getting up because I like to sleep. Because the second thing was sleep. And I do go on not many hours, 4 to 5 hours a night, but I've got to try and increase that. But no, it's I think you can get that work-life balance because you don't, it used to annoy me when I used to hear these big US banks where people used to have a suit on the back of a chair to show they're there, and they go off limited lunch, 1 to 2 or whatever the thing is. I don't want to put any limits around anybody. The only limit is that we've got to deliver good returns for our investors, not being seen at work or, one of my biggest pet hates is people taking advantage. And I always said my property at Scone, I feel like calling it don't take advantage or something like that. That's my biggest pet hate. And I think it's, it hasn't worked for us. It's one because of poor performance, but because even if you had someone who was a very good operator, if they're taking advantage of you, and they won't, I wouldn't say they'd be a good operator if that was the case.
No.
And so they can go off to bloody go to the beach or go do whatever it is, but the really good guys, are going to be passionate. And if they're not passionate and they're not doing the right thing and they're taking advantage, well, maybe, and they're good, maybe I've done something wrong in the way that I've managed that particular situation.
Yes.
And I need to look at the way, and I do a lot of introspection.
Right.
And I feel like I'm grateful to be working with the people that I work with, and it's really up to me to make an environment where they feel happy and they can have that good work-life balance kind of thing.
Yeah. So for the listener, David, you can just see the expression on his face. He's just so passionate about this.
Yeah, and it's about trust and honourability, I think, as well. It's not about, okay, things go well and changing the goalposts. Things go up and down, and it's about the long term, as I always say.
Yeah.
Doing the right thing,
Yeah. You were very humble with your polo. And for the listener, I just want to give you a bit of an understanding of David's contribution or his passion for polo. And I was reading, and it accumulates at the end, so bear with me. He's a 16-year veteran of the sport. And I have a question here. Do you just love horses? Is that what got you into it?
Yeah, I love the horses, but I love exercise. I love being fit, and I love being part of a team.
A team. I was going to say.
It's about what works in a team. How does a team work? That's my passion.
Yeah.
Is getting me as well, being part of it, contributing and getting a good result at the end.
So my take on it is James Packer got you into polo right at the very beginning, was that?
They have a place up near where I live at Scone, and
right.
James decided, but I was playing little league stuff.
Yeah, but that's where the sort of started, that passion.
And James gave me the break because I was able to go and play up at Elliston and Ross Packer and Cradle and the whole Packer family. It's been fantastic.
Wonderful.
Yeah, it has been wonderful.
And so then the name of your team is Scone.
Yep.
Which is, I think it's just a great reflection of it as well. Your old country town. It's pretty cool.
Yeah.
So David went on as part of the team. They won the Queen's Cup in England in 2019. In 2021, they won the US Polo Association Gold Cup and the US Open Polo Championship, two of the biggest polo tournaments in the US. You won the 2022 Jockey Club Open in Argentina. And then to cap it off, which is probably not your biggest award, but you had your photo on the cover of the Polo Times accepting the award from the Queen.
Last time. In fact, it was 2019 was the last. She said, there's a video of me and her having a laugh.
Yeah.
And she said, where is Scone? I said, it's remote New South Wales. And she said, has it ever been back? Can you take the cup there? I said, I'm going to try and take it. Anyway, I went through the airport and I had the cup, it's a massive cup, in a bag. And I knew that I was going to have trouble, so I put it through the magnetic thing. And all the security guys, what's this? Anyway, I had that cover of the magazine with my photo with the Queen.
Yeah.
And they looked at it straight through into the chairman's club. No, not really, straight through them. I do love it because it's a teamwork, getting a team to work well and getting results. And it's nice.
Oh, it's just wonderful. I found a quote from an article by the US Polo Association, Click Palooza, in April 2023. And I think just to summarise, David's very humble, but this was in a particular magazine, and it says, this is quote, David Paradice is a true inspiration for all the polo players who believe in hard work, dedication and professionalism. His achievements in the world of polo are a testament to his love for the sport and his unwavering determination to succeed, which I must say encapsulates it pretty well and is pretty special. So,
where's that from?
That was out of the US Polo magazine.
Right. No, it's
US Polo Association in April 23.
Yeah, it keeps you fit, and I can work at the same time, which is really good. It's 90 minutes, but get up early in the morning, go to the gym, can work, and I forgot. It's about the guys that I play with are extremely focused. And it is interesting. I have been playing with the best player in the world. He's a nice guy called Adolfo Campiosa.
Right.
And the Queen asked him, because he knows the Queen well, because he's won the Queen's Cup, for example, 10 times. And the Queen asked him to the various weddings and stuff, and asked him to do a horse show with her. Oh, I don't want to do that. and you walk around and you'd see him on his chair in the middle of the barn, right? Like by himself. People want him to go out and make, because he's the best polo player ever, make speeches and stuff. But it's focus. It's the same with us.
Yes.
You know, I used to be involved in the horse stud, and everybody around the table, Jerry and all those really good operators in our own field, we weren't concentrated on the horse stud. You know, whereas people like John Massara and the other guys that own Mitchell boys that own Yarran Park, focused.
Yes.
You know, and that's focus, whether it's a polo thing, whether it's a work thing, you know.
Yes.
I don't want to do things half-hearted.
No. The thing that rolls in with the polo is your love of the farm. I know you really wanted your kids to get that country lifestyle. Has it made a big contribution to your life, the farm overall? You know, it sounds like you just really just adore it.
No, I do. It's a negative financial contribution, but spiritual, definitely. Yeah, no, I love being outdoors. I surf, but I also, it's nice to be outdoors in nature, and my children have benefited from that business of getting chore when they're younger, chores, going off and mustering cattle and getting amongst it, rolling up their sleeves and doing the work. Yeah. I think it's important that life is not given to them on a platter. Yeah. And my wife has done a phenomenal job, I think, in that respect too, that they're not entitled.
No.
And I see it in the equity market when you come across people. Some of my guys that are quite hungry, they love coming across entitled people on the other side of the table because they know that they're going to win that event. And so, yeah, people that have done it tough and haven't had stuff given to them on platter and don't entitled, I love spending time with, you know, whether it's like, you know, Jerry or any of these guys, not because they've got money, it's because they've had a Solly Lou, you know, all these blokes, all good blokes. You know?
Yeah.
Even James Packer, he's a great guy. He's a smart guy.
Yeah.
Really smart, you know, and I love love learning and being with smart people and nice people as well.
Just fantastic. Well, look, David, I could sit here and chat with you for ages. I know you've got time constraints, but I will say this has been a absolutely wonderful chat. It's been so insightful. I've loved every minute of it. And I know all of us at Euros Hartleys are grateful you've taken that time out, as I said at the start. I think some of the takeaways that you've provided us really are just going to flow over a lot of our listeners, and, you know, understanding the way you've approached your business over such a long period of time, your investment philosophies, the way you go about it, and the way you understand what's required to produce longevity in the game and be successful.
Yeah, and it's really important, and I've been focused a lot of attention on getting really good young people coming in into our group and having the right kind of people. And we've got some really good young people and old people. We've got across the group, we've got really nice people, and that's really important.
Yeah. So on behalf of us all here at Finding the Front, thanks a lot for sharing with us. Hopefully we can do this again sometime. So thanks a lot, mate. David.
No
good
problem.
on you.
Thanks very much for having me, man.
Cheers.
Greatly appreciate it.
Good on you. Thanks,
right,
David.
Mate.
Bye.
So, never hurt taking a profit is one thing. Was it that? Was that the tips? And not everything goes up forever.
No. Good on you.
All right, mate.
Cheers.
See ya.
Thank you.
Bye.
Thanks for listening to Euros Hartleys Finding the Front. This podcast is for general information purposes only. Please check out euroshartleys.com for more information. Euros Hartleys holds Australian Financial Services Licence 230052.